from the FIs. Moving to what the FIs did on the future space, they added short positions. Both on index futures, they added short positions. Even on stock futures, there were shorts that were added. So we've got shorts in the system. Percentage terms, 91% of the positions on index futures itself is on the short side. So they're aggressively net short. If you look at it in absolute terms, the clients, their long positioning has hit 1.43 lakh contracts. And I was just going by the chart, in the last 10 months or so, we haven't seen this sort of long build-up from the clients. And the FIs, have been, as we've been telling you, their short positioning as well is closer to the upper end of the last few months in terms of the short positions. So that combination is something that normally you like, but of late, the markets itself have got punctured and the structure has got punctured. Moving to the options data, the 25,600 call aggressive writing is what we saw there. Premiums down to around 50 rupees, while the 25,500 put. Now, this is interesting. Yesterday, it appeared there was writing at this level. The premium has come down to around 40 rupees or thereabouts. So those writers, they'll be looking to defend the lower levels. And a couple of technical indicators, they're moving towards the extreme end. So the RSI on the Nifty is around 37. Remember, at around 30 odd, it gets closer to the oversold level. So that's going to be important. And the PCR as well at around 0.77. At around 0.65 is when it gets to that oversold level. So both these two indicators are gradually moving towards that oversold level. So the structure on the Nifty, that's punctured. However, the 25,450 mark is extremely important. In the last 10 days or so, we have gone to that mark, 25,500, 25,450, in that vicinity a couple of times, and we have bounced from there. An adventurous trader would like to maybe go ahead and take a bit of a punt at around this 25,450, 25,500 mark, just because there's important support out there and because we have bounced off those levels. The Nifty Bank, that'll have to lead the way in case you see some kind of a fight back, because the 20 DMA, that's the first reference point, and at around 59,000 odd, you have the 50 DMA. So that's the important zone. In terms of stocks to track, well, Havells came out with a set of numbers, top line growth pretty good. The problem is in terms of margins, but industry sources are indicating that maybe there's a price hike as well that's gradually getting pushed through that, hurt them in terms of margins in the last quarter. So maybe that's a stock to track. Came out with a set of numbers, management joining later today, one of the stocks that we'll be tracking today.
The only thing with Havells is it trades at 50 times forward multiple, according to Jefferies. So that's 5% above the 10-year average, which is why some analysts have a hold call on Jefferies. But let's get back to the global stories. Lynn Alden, founder of Lynn Alden Investment Strategy, is now joining in. Thank you very much for joining in. Trump, Europe, Greenland continues to be top of mind. Europe sold off 1.5% overnight. Today, the U.S. markets will react. How do you expect this situation to play out? Do you see the tariffs on the 8 European countries going through on the back of Greenland? Will Europe retaliate? What, according to you, in the base case, might be the fate of Greenland?
Yeah, so I think there's a difference between what happens on the next day versus what happens over the coming weeks. We saw over the past year, whenever there were very big tariff escalations, there tended to be immediate term reactions. But then the market generally tried to see through it and assume that there's going to be some sort of de-escalation. It's possible they'll get caught out that time. Maybe there won't be a de-escalation. But I think that the multi-week kind of bias of the market is to try to look through that sort of thing. In addition, at the same time, the country is awaiting a Supreme Court decision on the legality of those tariffs, which is not really a Boolean outcome. There's a spectrum of outcomes there that could somewhat constrain the president's ability to do these kind of like unilateral, large-scale, long-term tariffs. Right now, if you look at betting markets, the market is betting that the Supreme Court is likely not going to rule in his favor. And so base case seems to be some sort of restriction on those. The administration's already said that, should that happen, they do plan to try whatever legal workarounds they can. So I don't think that, by any stretch, the tariffs are going to go away. But I think that there's a mix here that the market is saying, okay, there's some degree of de-escalation that might happen, combined with the Supreme Court just making it complicated and therefore slowing things down to some extent. So I think that gives the market some breathing room, even though I don't necessarily expect this to be a smooth week.
Got that. Lynn, the other one in the courts, not today but tomorrow, is reports that Fed Chair Powell plans to be present in the courtroom when the matter of Lisa Cook's firing comes up. So this is kind of sort of shaping up for the first time, I guess, ever, a proper fight between the Fed and the executive authority. So does that have any implications at all? Markets got pretty used to President Trump attacking and demanding lower interest rates, but they're not used to the Fed kind of sort of standing up and fighting.
Yeah, this is probably the biggest feud between the Fed and the executive branch since 1951, since the Treasury Fed